Hi, Jeremy Peterson here with Vesta Real Estate in Ogden, Utah. It is August 2021 and time for another real estate market update. We have a lot to talk about today, so let's go ahead and talk about our headline numbers first. Prices year over year are up 29%. Our transaction volume is down 25% from last year, and our days on market holds steady or very steady, nearly at 6 days on market. So things are beginning to change, and I believe that we are nearing or in, if we're not already in, an inflection point in the marketplace, albeit a slow motion inflection point, because that is how the real estate market works. As we discussed back in May, the market seems to be experiencing some unsustainable extremes. And as we take a look at today's market charts, it appears we may have bumped into the boundaries or the natural limits of those extremes. So let's go ahead and get started, and we're going to take a look first at our affordability chart. As you can see here, we have been on a tear all year. Now remember in this chart that up means less affordable and down means more affordable. And so this chart has just been surging upwards all year long, except for July, which showed a modest improvement in affordability. And it's not much, but we will take what we can get. Why was there an improvement in affordability? Well, we can take a look at interest rates, and interest rates decreased slightly, and I mean just a very little bit. The CPI index, which measures inflation, increased. And since that measures overall inflation, that improved the affordability of homes. And finally, there was actually a pause over the last several months in price growth. And that may sound kind of surprising. We just heard that our price growth over the year was 28%, but that's over the year. If we just look at the last several months, we actually have a pause, if we want to call it that, in price growth. So let's take a look at our month-over-month chart. It just shows us how much house prices increased over the prior month. And the black line here in this chart is our 12-month moving average. And you can see that for the past year, it's been surging upward with this nice upward slope. And then the past couple months, we see that slope kind of roll over. And the blue lines, which represent the monthly increase or decrease, there's only been a couple times in the past outside of winter months where we've seen a flat or kind of decreasing month-over-month reading. And those are some unusual events. The ones that are in this chart, you'll see late 2018 when interest rates were increasing. That affected month-over-month pricing. And then at the beginning of the pandemic last year, that affected month-over-month pricing, and then of course this summer. And so that's just kind of three unusual events outside of winter months affecting month-over-month price growth. This flattening shows up in our yearly price growth chart as a rollover in the chart, which looks like a deceleration in house prices. So still 28%, 29% is very healthy and very strong, but we appear to be slowing down if this trend were to hold. So the bigger story that is not being told right now, but is actually a significant issue in the marketplace, is the collapse of our transaction volume. So July saw 25% fewer sales than last year at this time. And that's a significant event. If we look at this chart, you can see for the year, sales volume has been declining from the prior year. And if you think this chart looks bad, let's take a step back and look at the 10-year picture. And in order to find a year this bad, you have to go all the way back to 2011 for that sales slump. Obviously, very different circumstances occurring today than back then, but it still means you have some hungry realtors out there, since there are so many in the marketplace. And when you have fewer transactions, you get some hungry realtors. So what's behind the slump in sales? And that I think goes back to our affordability issue, where we have the price of housing increasing, the price of transportation and other things increasing. And we might be reaching that point now where the price of things are starting to bump into each other in the household budget. And so if housing is just so high and then the price of your new vehicle increases 30%, well, you're going to have to trade off somewhere, either not get a new car or buy a smaller house or a smaller car or some combination of both. So that's something that households are working through right now, as the price of everything has been repriced. Also, their sellers are not willing to sell as much, again, because they have to put themselves into the buyer's shoes as soon as they do that. Even though they might command a superior price for their homes, they're having to jump from the frying pan into the fire. And so in this kind of a marketplace, it's a little difficult. But meanwhile, while this slump is happening, the homes that are selling, their days on market is only at 6 days, which is still a record pace, record fast sales. And so really some interesting data points here. So if you're in the market to sell your home in this dynamic market and you need a professional to assist you, give me a call, and appreciate you tuning in. Thanks.